Hey everyone, welcome back to Corporate Decoder, the place where we figure out what companies are really up to. Today we're diving into some paperwork from BlackRock, and let me tell you, there's more to this document than meets the eye. It's like a perfectly organized closet, seemingly in order, but let's see what's inside. This is their proxy statement, which means it's time for their annual shareholder meeting, and that means it's time for us to see who's on the board, how much the executives are getting paid, and what proposals are up for a vote. So let's decode. First off, BlackRock wants everyone to know they're all about generating long-term shareholder value. They say they're focused on delivering the best investment solutions and that their diversified platform drives strong long-term performance. They're talking about organic growth, leveraging their scale, and returning capital to shareholders. Of course, every company says that, but we'll see if the numbers back it up. In the letter to shareholders, the CEO, Lawrence Fink, mentions that 2024 marked the 25th anniversary of BlackRock becoming a public company. Back then, they had about 650 employees, and 2024 was a milestone year for them. At this year's annual meeting, shareholders will be voting on a few key items, such as electing directors, approving executive compensation, and ratifying the appointment of their accounting firm. The board is recommending voting for the executive pay and for ratifying the accounting firm. They're also recommending voting against two shareholder proposals, one about reporting on the risk of stakeholder capitalism, and another about democratic reform of board elections, and another about democratic reform of board elections. Now let's get to the numbers. BlackRock says they generated a record $641 billion in total net inflows in 2024, which is 6% organic asset growth and 4% organic base fee growth. Revenue was up 14% and operating income as adjusted was up 23%. They returned $47 billion to shareholders through dividends and share repurchases. BlackRock's 2024 operating margin as adjusted was up 280 basis points, settling at 44.5%. BlackRock's also been paying out increasing cash dividends with share buybacks, and they delivered 43.61 in diluted earnings per share. There are some board changes in the works. They are nominating 2 new directors with financial services expertise. The board is keen to show off its diversity. It will have 6 women and 6 non-US or dual citizens. Looking at the board's expertise, every single director nominee has experience in senior executive and corporate governance. Lots also bring global business, financial services, public company, and financial reporting, risk management, and more to the table. They state they conduct shareholder outreach throughout the year. They also mentioned that the chair of the board's Management Development and Compensation Committee participated in the Q&A sessions at their 2024 annual meeting. BlackRock's compensation program objective has an emphasis on shareholder-aligned, long-term performance-based incentives. The company mentions their NEO's total incentive awards are tied formulaically to percentage ranges. Now, as for how they pay the top executives, the MDCC assesses each NEO's performance based on financial performance, progress on strategic objectives, and organizational priorities. More than 90% of the NEO compensation is performance-based and at risk. The CEO also received carry incentive, which is connected to BlackRock's private markets growth as part of his 2024 total annual compensation. Moving on, the board recommends shareholders vote for the election of each of the 18 director nominees. They say the nominees have the skills and experience needed for an effective board. The board has determined that 15 of their 18 director nominees are independent as defined by the NYSE listing standards. They consider things like diversity, experience, skills, and viewpoints to enhance their capabilities. Several of their director nominees live and work overseas in countries and regions that are key areas of growth and investment for BlackRock, including Canada, the Middle East, and Europe. They also have stock ownership guidelines, which requires the company's leadership to own shares with a target value of leadership level times base salary. As of the end of last year, all NEOs exceeded these guidelines. The board leadership structure has Lawrence Fink as its chairman and Murray Gubber as its lead independent director. For 2024, the aggregate fees BlackRock incurred for Deloitte reached $34.1 million. The annual meeting will be held virtually at www.virtualshareholdermeeting.co/blk25. Lastly, BlackRock says that one of its values is to run a sustainable company. A key part of that effort is focused on reducing greenhouse gas emissions and employing energy efficiency strategies. They offer many different types of sustainable and transition investment strategies to clients. As of the end of the year, the firm had around $1 trillion in assets under management in that space. So what's the story here? BlackRock is painting a picture of a company that's growing, adapting, and committed to delivering value. They're highlighting their financial performance, their strategic moves into new markets, and their dedication to diversity and sustainability. But let's step back for a second. Looking at the numbers, it's clear BlackRock had a strong year. They're making smart moves to position themselves for the future. But the devil is always in the details. The shareholder proposal about stakeholder capitalism hits on a real tension. BlackRock wants to be seen as a force for good, but they also have a fiduciary duty to their clients and shareholders. Balancing those two can be tricky, and it's clear some people think they're leaning too far in one direction. BlackRock is at a fascinating inflection point, trying to balance profits, influence, and social responsibility in an increasingly complex world. Thanks for watching. If you enjoyed this deep dive, please like, comment, and subscribe.